Houston is one of the nation's leaders in job growth, but it's also posting the nation's weakest occupancy rate. So what gives? We'll explain. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Houston update. The Houston apartment market is reliable for two things: lukewarm occupancy rates and lots of new apartment supply. Let's start with the supply story. We've seen this one change dramatically over the recent months. Take a look at this chart. Only 3,446 units completed in the year ending June 2011. Now that ranks among the most nationally, but it's nothing for Houston. It's the smallest total this metro has seen in 14 years. By comparison, between 2004 and 2010, Houston added, on average, more than 12,500 units annually. So this is a big drop-off, especially since only 5 or 6 quarters ago, the market was delivering 18,000 units annually. So you'd think with that kind of drop-off in new supply, we should be seeing some meaningful occupancy growth, or you'd think. But the answer is kind of yes and no. We have seen some improvement, but not as much as we'd expect to see given the drop-off in new supply and the growth in jobs. Overall occupancy is still at 90.1%, up 0.8 points for the quarter and up 1.4 points year over year. And that puts Houston dead last for overall occupancy among the nation's core markets, just behind Jacksonville, Atlanta, Tucson, and Las Vegas. Now that's an ugly list featuring some of the nation's hardest hit markets. So how did Houston end up at the bottom of the list? Well, Houston is a unique market and there is so much obsolete product that's perpetually vacant. But when we drill down a little deeper into the data, we see some very interesting trends, and that is that the top half of the market has done considerably better than the bottom half. And so we're going to see this trend played out in 3 different ways. Let's start with occupancy by rent level. And you can see here that in apartments with average monthly rents topping the metro norm of $824 and excluding properties in lease-up, occupancy comes in at 94.1%. But in apartments with average monthly rents below the average, occupancy comes in at just 88%. That is 6 points lower. Now we see that kind of gap in a lot of different markets across the country, especially in the South and Southwest, but not nearly to such an extreme. Now take a look at occupancy by age. Decent rates in the top 2 tiers, apartments built in the 2000s, the 1990s, both around 93.5% full. Not spectacular, but solid. But then look at the others. 1980s, 87.7% occupied. 1970s, 85.9% full, and apartments built prior to 1970, 90.3%. And even more concerning, those older product age groups have seen no occupancy progress over the past 9 months, a period when in most parts of the country we've seen some meaningful improvement in the bottom tier of the market. And here's one more view for you: submarkets. The top-end submarkets have the best occupancy rates in the Houston metro. Fort Bend County, 94.7%, followed by the Galleria, West Inner Loop, and Montgomery County. Those are the metro's 4 priciest areas. And on the flip side, still some terrible rates in less desirable areas, just 83.2% full in Northeast Houston, 84.7% in North Central Houston, and around 89% in Champions and the East Inner Loop. Okay, let's wrap it up with a brief summary of some pricing trends for you. And here the story is actually pretty good. Same-store rental rates improved 1.7% in 2Q, and they are up 4% year over year. And on niche level, effective rents jumped 6% annually in the metro's apartments built since 2000. And we've seen 6.3% growth in the West Inner Loop submarket. And going forward, look for strong rent growth in the metro's top-tier submarkets and product age groups, while we should finally begin to see some notable occupancy growth in the bottom half of the market if jobs continue to come back. And that wraps us up for Houston. Until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.